But it's one of the trickiest things for companies to dissect is what the tax policy will be. A PwC survey showed that the C-suite executives were most worried about corporate taxes, not the coronavirus. Go figure. And the economy and the stock market are two things that President Trump really touts.
Record everything. You're going to have an incredible economic year next year. Your stocks are going up. Your 401ks are through the roof.
Can it, if taxes are increased? Well, here is what President Trump did do for corporations. The biggie was cut the corporate tax rate to 21% from 35%. But a big one was also allowing companies to fully and immediately deduct the cost of spending and equipment until 2023. And the question is, did it actually work? Now, one way to look at it is non-residential spending from companies. And you can see here it did wind up moving higher, up by over $2.6 trillion. It was moving higher throughout 2018, but also then took a dip because of the coronavirus. So what would President Biden do? Well, in one part, he would pretty much reverse a lot of that. So this would take into account a statutory tax proposal under Biden. It would become the fourth biggest in the entire world. The fear is that you'd reverse any of the gains that you saw. So companies like tech companies, for example, communications, healthcare, they would get hurt on a Biden presidency, whereas energy and materials may be somewhat immune because they didn't get that tax boost from President Trump. Now, of course, it all depends on just how quickly this would be implemented. If you go all the way and reverse the corporate tax rate very quickly, that's going to be more detrimental versus sort of phasing it in over time. One thing we do know for sure, though, is that President Biden would definitely make the rich pay. He would extend Social Security, 12.4% payroll tax to income over $400,000. The top marginal tax rate would be increased, and the low rate on capital gains, raise the top end rate on capital gains, and something like a carried interest that private equity loves and likes to live on. Just forget about it.